Welcome to Market Demystifiers. Today I have for you a quick but also very urgent update, because from tomorrow things might start changing. Why is it the case? Well, at 8:30 Eastern Time, just before the US market will open, tomorrow we will get the new US inflation reading. And this might come as a shocker for many people, especially the bulls in the market, because what we are about to see is reinflation. Now, as you can see on my screen, this is S&P 500 and the US stock market index. And as you can see from middle of October, we are in a strong uptrend. I have drawn two parallel channels to show you that the uptrend is now even stronger in the recent months than it was before. And we were promised three things, or this uptrend is based on three promises. One, inflation is cooling and it's gone. Two, because inflation is gone, Fed will be able to stop raising rates and they will start cutting rates. Three, AI. Now coming with the first point. So is inflation gone? Well, not yet. As you can see on my chart, inflation has indeed dropped the year-over-year change to 3%. And it is quite low currently. But this decrease was mostly because of the base effect and the negative year-over-year change in prices in case of energy. Now things will start changing from tomorrow, because tomorrow the base effect will no longer be in play. And as you can see here on the left side of the chart, in the 70s and 80s, when inflation spiked higher, then it went down significantly, but then it spiked even higher. And I'm not saying that inflation will repeat this cycle. I'm just saying that we will now have a second wave of inflation. We don't know yet how high it will go, but things will get quite scary very soon. Now, remember that we are having this 3% year-over-year change, and it was decreasing each month from the peak. This website is owned by the Fed, by the Cleveland Fed. And what they are doing is they have their own model when they basically project what the inflation reading will be. Now, the first table is the month-over-month change. And if you look here, you can see quite big increases. For 0.4 change in the July reading, and then in the next month a 0.8 increase. Now, month over month is very important, but let's look at the year over year, because this is what you will see in the media. So currently we have 3%. Now the Fed expects the inflation to spike higher to 3.4%, and this would be shown tomorrow. Of course, the number can be also different, because this is just a model, and model, it can be correct, it can be incorrect. And then in August, look at this. They expect the inflation to accelerate higher even more to 4.1%. So the premise that the inflation is gone is simply wrong, because now will be the real test for the Fed. Now we will see what will they do. Will they pause and just let the reinflation occurring, or will they still continue doing what they do? So raising rates until they will know that inflation is under control. Basically, what we need to do in simple terms is to not enable inflation to move higher. We need to stop this uptrend, and this uptrend will happen for sure. Now, why it is happening? Look here, the month-over-month performance, and what are the biggest changes. It's not the S&P, which is here in the middle. It's not Nasdaq. It's not Russell. It's heating oil, crude oil, WTI, gasoline, natural gas, orange juice, crude oil, Brent, soybean meal, and look at those increases: 22%, 13, 12. It's massive. And now it's important to stop it, because if we won't stop it, it will be quite dark. And even, if you look here, this is the crude oil futures chart. You can also see how it was in a decreasing channel from March of 22. We are now testing the highs of this range. We are currently above those highs. And based on technical analysis done by the Wyckoff method, one can expect that this could really be an accumulation range, and the price can go significantly higher. There is really nothing here, no resistance, because there is a wide space. So what can happen is that if this breakout would be confirmed and the price will start moving higher, the next resistance level might be here, so $93, an increase from the current level of $84. So we already had significant increases in commodities and in energy, but it's just the beginning. So it's very important that the Fed will react very strongly. So as I said, the three premises of this increase, of this massive increase in the stock market, an increase which is now getting closer and closer to the all-time high, which were achieved in Jan of 2022. First premise, end of inflation. Not yet. Let's see how it will evolve. Let's hope that the Fed will not stop and they will erase inflation from US. Second point, the Fed stopping raising rates and cutting rates. Well, because the first point is not yet done, you cannot expect the Fed to stop. Even their own model is predicting inflation year over year to go up to 4.1%, 3.4% in July, and 4.1% after 1 month in September, when we will get the reading for August. Those are massive increases. And imagine if the stock market is rallying so much, if employment is so strong, why they would stop raising rates? Now they need to focus on inflation again, and they cannot stop yet. And now the third premises, which I was talking about, was AI. And basically, this AI mania has accelerated significantly from the earnings of NVIDIA. What happened that caused this AI mania? When NVIDIA had its quarterly earnings release in April, as you can see, their revenue was 13% down. Yes, their net income year over year, it increased by 26%, so a nice increase. But was it enough to start this mania, to start this enormous rise in the AI stocks and also in NVIDIA price? No, it was not enough. What happened really, apart from the CEO and other people saying AI 100 millions of times, what really happened was their projection. They projected that in the next quarter, which is the current quarter, they will increase their revenue by $4 billion. And interestingly, if you analyze the consumers of NVIDIA and the producers of NVIDIA, you really cannot see so easily from where this increase in revenue will come. So a very important date, 23rd of August, when their quarterly earnings will be released. Just remember this date, because if they will not deliver, and they have already done it in the past when they increased their projection, but then they didn't meet it. So if again they will miss it significantly, expect a large correction, unless it's enough now to say AI, and people will just continue buying. So let's see. In conclusion, I believe that we are now in a situation where the stock market rallied on false premises, and we will see reinflation starting tomorrow, 10th of August. And even though the market, of course, can still react positively, because they can say, oh, even if inflation increased year over year to 3.4% from 3%, it's still very low, so no problem. Okay, let's see what will happen in September when we will get the August CPI reading, and it will be 4.1%. And with time, the Fed knows it. They cannot stop. And as the employment is so strong, they will continue raising rates. And this whole AI mania can also drastically, significantly shift from 23rd of August. So let's see what the next days, what this month will happen. We also know that this seasonality, the month of August, and especially the month of September in the pre-election years, are quite poor in case of stock market returns. So let's see if we will see this big shift down. Please like and subscribe if you enjoyed the show. Comment. I'm really looking forward to reading and answering your comments. And see you in the next one. Bye.